Hello guys, it's CastAwayTrader and I'm presenting today another new lesson that would be uploaded to my video course, which is called Predict the Market with Harmonic Elliott Wave Analysis, which is actually the starting point if you want to start learning the modified and, in my opinion, better Elliott Wave theory. And in that bonus lesson, together, step by step, we will count waves of a multi-year rally in Intel stock, from the major low in 2008 until the very last day today in September 2021. And before we start, I want you to read that important disclaimer. Past results are not indicative of future profits. Okay, so I mentioned that I have two video courses. The one for beginners is called the Predict the Market with the Harmonic Elliott Wave Analysis, and once you go through that course, you will be able to get into more details, which I explained in details in my second course, Trading Harmonic Elliott Waves like a Pro. And as you can see, hundreds of students have already taken those courses, and that first course is actually a bestseller on Udemy.com, which is the largest educational platform in the world with more than 20 million students. I do not have 20 million students yet, but I have several hundred students, and as you can see, I got pretty positive reviews from hundreds of guys who subscribe to my video courses. And before we start, let me just show you several reviews. Excellent course, great instructor. The instructor thoroughly walks you through all the basics. Absolutely satisfied with this course, and the course can take you from absolute beginner to a pro within the two courses. This course is extremely detailed and I love the quiz. You can read more reviews on Udemy.com, and I will add links in description of this video. Let's get to business. And let's talk about the way how we apply the Harmonic Elliott Wave theory in practice. The whole idea behind the wave analysis is that we have a collection of patterns, and we do not have hundreds of patterns. We have a very limited number of repeating patterns which we can identify in the market, and if we identify that part of the fractal, we call those patterns fractals, we can expect that fractal would keep playing out in small details up to the point when that fractal would get completed. And Intel gives us a perfect example how the stock has been following that specific fractal for more than 12 years. Amazing. I'm gonna show you and you will be amazed as well. Let's start from the beginning. So this is so-called the 5-wave up fractal. This is the fractal, the structure, which every stock normally follows if it's really trending up. And that fractal, that move, starts normally from a small move, one up, two down. And you can see stock makes ABC up, some kind of a zigzag, and ABC down. In my courses, I explain in detail why stocks are doing that. The main reason is that what drives prices in the stock market is sentiment of market participants, and sometimes bulls get confident, we push price high, then we start doubt, we think we push too high, bulls come, we think price went too high, we start pushing it down, and it's always like that. It's fight between greed and fear, and this is why prices never travel in a straight line. They make one step up, one step down, because those two main forces, bulls and bears, they fight each other, and the product of that fight is actually what we have in our chart. The product of the fight is those repeating patterns, and the main pattern, as I've mentioned, the 5-wave up pattern. So you see, we normally start from one up, two down. Now let's come to the actual chart and see how it actually works. This is Intel chart, weekly chart, and every time we start with a blank chart, you see no nodes, nothing, just a price structure. if your eye is trained, as it's mine, I will immediately see 5-wave up fractal. But in 5-10 minutes you will also see that, I promise. Let's start. So we always start from finding a major low or major high. Here it's not a problem. We see that the stock made a major low at the end of 2008. And the first move up, we label it as A. Why we label it? Because we want to make sure that we understand what's going on. We kind of track the price move along our fractal, and this is C, and look what we got. We got ABC, the first move up, and here we could identify A down, B up. It should be capitals, because every of those waves, every move, we call it a wave, and it took months, so that's why we use capital letters. And every time we switch to lower time frame, remember it's weekly, we would be using smaller letters, so we would distinguish it for ourselves. Big moves that took months from small moves that could take days or even minutes. Let's come back to our fractal. Look, we got ABC up followed by ABC down. What's really important, that ABC down made a higher low in comparison to the low, the starting point of that whole rally. This is what we got: 1 up, 2 down. And this is what normally follows. What normally follows is the strongest part of the rally, which is wave 3, and wave 3 has to be subdivided into two main legs, A up and C up, and in between we would have a corrective counter trend pullback in subwave B. So we call parts that together comprise those big moves waves. So wave 3 is a big move, you see, I highlight it in green. We call them subwaves, like parts of a bigger move. Let's come back to the actual chart. According to the 5-wave up fractal, the first ABC move up followed by ABC move down, making a high low, should be followed by the heart of the rally, the strongest part of the rally in wave 3, which itself is subdivided into A up, B down, and C up. The hallmark of any 5-wave up fractal is the strongest part of the rally, wave 3 up, located in the middle of the rally. What is really important is that wave 3 up should make substantially higher high than the high made by the first wave, wave 1 up. And what is even more important is that every corrective pullback on the way up should make a higher low. So subwave B down or wave 3 up should make a substantially higher high, higher low than the previous low made by corrective wave 2, and the corrective wave 4 down, which we'll be talking next, would make a higher low in comparison to that low, subwave B down in the middle of wave 3 up. What is also very important is that, as I mentioned, there are two legs up, subwave A and subwave C in the strongest part of the rally in wave 3. And subwave C of wave 3 normally should have a very clean 5-wave up subdivision. This is why we call it a fractal. When we deal with 5-wave up fractal, it has many parts which are themselves structured as smaller 5-wave up fractals. Look, subwave A of 1, subwave C of 1, subwave A of 3, subwave C of 3, subwave A of 5, and subwave C of 5 all should follow the very same fractal but of a smaller size. Now let's come back to the actual chart and we see how we can identify small 5 microwaves inside the strongest part of the rally, subwave C of wave 3 up. To do that, we need to go deeper from a weekly time frame to a daily time frame. This is the strongest part of the rally in subwave C of wave 3, and ideally we should be able to identify here 5-wave up fractal of a smaller size, and we can easily do that. That would be A of 1, B of 1, CO1 followed by ABC down corrective structure in wave 2. And it is followed by a stronger part of the rally, so inside that 5-wave up fractal of a lower degree of a smaller size, it has its own wave 1, wave 2, wave 3, wave 4 and wave 5. And here it would be A of 3, it would be B of 3, it would be C of 3, it would be wave A, subwave A of 4, subwave B of 4, subwave C of 4, and the final wave up, A up, B down, and C up. Together we comprise wave 5 of C of 3. And this is exactly what our fractal promised us. We should get 5 microwaves inside subwave C of wave 3. Now let's come back to our model fractal in order to see what should happen after the strongest part of the rally in subwave C of wave 3 tops out. Under the 5-wave up fractal, the strongest part of the rally in wave 3 should be followed by a corrective pullback in wave 4, which itself is structured as A down, B up and C down. If we come back to the chart, we can clearly identify them. B up and C down. We can zoom in to focus on that specific corrective structure. And we have a very common repeating fractal of such a corrective ABC down structure. Let's study it. What that fractal says is that normally wave 4 is subdivided as A down, B up, C down, but details are very important, because if we zoom in, we will see that that first leg down in subwave A is itself structured as ABC. And the pullback that follows in subwave B is itself structured as ABC. And only the final push down in subwave C of wave 4 is subdivided into 5 microwaves down. And now let's come back to the actual chart and see whether that rule was obeyed by the Intel stock. And we can identify here subwave A, that would be subwave B of 1 degree lower, and the final subwave C. So this is the first 3-wave down move, but it becomes only the first leg down in a corrective A down, B up and C down structure of wave 4. Look here, we can also identify some ABC structure inside a bigger subwave B up. And finally, we are getting 5 microwaves down. 1 down, 2 up, 3 down, and A, B, and C of 4, and the final push down in the final wave 5. So we got as a corrective zigzag A down, B up and C down, and the wave 4 down was completed somewhere in November 2020. Now let's come back to our model fractal to see what normally follows a completed corrective wave 4 down. Under the 5-wave up fractal, the corrective structure of wave 4 down is followed by an impulsive structure of subwave A of wave 5 up. In this case, impulsive structure means that the rally that should follow the corrective wave 4 down should have 5 microwaves inside its structure. What we should also remember about subwave A of wave 5 is that in majority of cases it is unable to sustainably break out over the top made by wave 3, so in majority of cases it makes either double top at that level or triple top if subwave B was strong enough to make a double top. Let's come back to Intel case and see whether it worked out. And we can see that we got an impulsive move up that topped, surprise, right at the top of wave 3 up. We can add here a resistance, and you can see that it almost topped right at the point where the previous rally in wave 3 up topped. And we can identify here 5 microwaves. That would be 1, that would be 2, that would be 3, that would be 4, and that would be 5. And together that is A of 5, the first leg up in wave 5. Now let's come back to our model chart and let's see what we should expect next. The theory says that subwave A of wave 5 up should be composed of 5 microwaves. We checked it and it worked well. Then we should expect subwave B down that should be composed either of 3 subwaves or 5 subwaves if shaped as a triangle. But what is really important is that subwave B down should make a higher low in comparison to the low made by wave 4. And what should follow is that once that corrective bounce is completed, we should expect another impulsive structure in subwave C of wave 5, and sometimes it comes as a really strong rally, but in any case it should make a new higher high in comparison to the high made by wave 3. So basically it makes the highest point of the whole 5-wave move up, and in Intel case that move up, remember, started in 2008, so that means that we need to see another rally once a corrective wave subwave B down would be completed. Now let's come back to that and see. We could call it like A, we could call it like B, and here we can count it as C, and we can call it B of 5. In that case, we have an attractive long setup because we got the top of wave 3 that was followed by a corrective ABC move down, that was a corrective wave 4, that wave 4 followed by an impulsive move up in subwave A of wave 5, and it was followed by another decline, making a higher low in comparison to the low made by the previous corrective wave 4 down. And that is subwave B of wave 5, and that means that we should expect another move up in subwave C of wave 5. Let's put it here, of wave 5. And what I did not talk about that video is that the harmonic Elliott wave theory is much more than only counting waves, because all those waves normally follow a specific relationship. And how it works, what we do, we just measure subwave A of 5, and we project it from the low made by wave subwave C of 5, and the most common extensions, we call it extensions, would be 100, 123.6 and 176.4. This is expected level where that subwave C of wave 5 should target. And here, because we expect an impulsive structure, we should expect some 5 waves up. Again, it's not clear at that moment whether subwave B of 5 bottomed or not, but it should not have much more space to go lower because we have another tool which is called retracement, and normally subwave B of wave 5 stops at 66.7% retracement of that rally, and this is exactly where the decline stopped, up to the penny. Sometimes it goes a little bit deeper to 76.4% retracement, and this is a potential extension of the decline. But I think that bears do not have much room left to push Intel down, and I think that as long as Intel holds over that level, over the previous low made by wave 4, we can identify it as a critical support, and the corrective wave 4 down bottomed at 43.61 on October 30, 2020, critical support 43.61. And this is the whole idea how you use the harmonic Elliott wave theory and its unique collection of repeating fractals to find winning trading setups. You identify an impulsive move up like here, you wait for a corrective decline that makes a higher low, and you start expecting another impulsive rally which should make a much higher high. Sometimes people ask me what happens after the 5-wave up fractal plays out. Let me show you the model. Normally, after we have a completed 5-wave up fractal, 1, 2, 3, 4, and 5, we have a large corrective ABC down. Again, normally it comes as 3 down, 3 up, and 5 down. And that corrective structure, which is highlighted with that yellow box, can easily erase 50, 60, or even 76% of the preceding move up. And it could take years because that rally that started in 2008 and still going up has already taken more than 12 years. And if Intel takes another year to top out in subwave C of wave 5, we could imagine that it could take several years after that to correct that whole rally and to produce a large ABC move down. Guys, thank you for your time. I hope that I gave you a great example showing that the harmonic Elliott wave theory is a powerful tool in trading. Not only it lets you understand what's going on with the price and what you should expect next, but it helps you to identify winning trading setups. Of course, this is a perfect case. Intel is a perfect case, and sometimes you will not be able to identify those waves so easily. But you do not need to be able to identify waves and trading setups in every single stock. You want to make money, and if you cannot count waves in some specific stock, just switch to another stock. There are thousands of stocks out there. Some stocks would be following the 5 up fractal much better than other stocks, and you do not need to be able to identify waves for all of them. Focus on those that have been perfectly following waves, and you will be fine. You will be able to make good money for a living.